Let's welcome on board Sudip Bandyopadhyay then and find out what he's making of the market right now. Sudip, just looking at the markets today, it seems like at least within the Nifty, there is a churn which is taking place. Where would you recommend now, if at all you spot any value in the market after the recent correction?
I do spot value in BFSI, Aisha. I think, BFSI never went up the way the other sectors went up. And, after correction, some of these stocks are really looking attractive. And if you want to remain, safe, play safe, not an aggressive strategy, then it's best to stick to the large cap banks. State Bank of India comes to my mind, and I think there are enough and more indicators which will clearly point out that the valuation is attractive. Asset quality has improved and is improving. All the subsidiaries, including SBI Cards, which had asset quality challenges, have come out of that and things have improved. Performance of subsidiaries is good. Credit growth is decent. Interest rates in the economy is coming down, which does favor efficient and large banks. So overall, I think SBI definitely needs to be looked at from an investor's point of view, from picking up and building a portfolio. I also like cement. I think till Q3 there were challenges on demand, and in spite of demand challenges, some of the companies, like let's say the leader Ultratech, did exceedingly well. And the cost efficiencies they brought in led them to beat the market expectations. And in a scenario where demand is picking up and is expected to continuously pick up in the near future, I think they will continue to perform and outperform the market. So again, Ultratech for a safe investor does look a good bet at current levels. One can look at defense electronics, and I do like Bharat Electronics, BEL, quite a bit. Post correction, it definitely looks attractive. Look, it's not a cheap stock. But, if you are in for 1+ years, I think BEL again is a good buy. Remember, it does cater to all, sections of the armed forces, Air Force, Army and Navy. They are also into exports now. And the company has been well managed for quite some time. The balance sheet is strong. So BEL amongst the PSU defense electronics can be looked at.
Talking about BEL, a short while ago, they did mention the fact that they've bagged an order from the Ministry of Defence. So that also could be one of the reasons why the stock is actually perked up in trade today, approximately 3% up move coming in for BEL. Sudip, good afternoon. Cheryl on the other side. Just wanted to get your sense and your understanding of the entire auto space, given the fact that there was a time when everyone was talking about the EV disruption and what it could do to the entire space. Now, more and more, it looks like that disruption could actually fizzle off. The entire enthusiasm behind this EV sort of a thing is dying down now.
I don't think it is dying down, but yes, I think there was little more exuberance than probably what was warranted. It will take time. We were assuming, I think market was assuming that it's a magic wand and suddenly EV will become the leaders and anything to do with EV will start doing well. It's not so easy. It will be a gradual and long period of transition. And even after transition, IC engines will have their place. I can talk about a parallel of coal. At one point of time, people thought coal will be redundant. But look at what is happening today. Thermal power is growing. So is green energy, so is hydro. So I think it will be like that. EV cannot miraculously start doing well and take leadership position. It's a long grind. Having said that, I think the uncertainty around EV is also too much. So if somebody is interested in the automobile pack, my thought will be better to play through auto ancillaries. And I have been talking about this for very long. I think, some of the auto ancillary companies in our market are, playing in the global space. And they are very well integrated with global OEMs. So one needs to look at them.
The other bunch of stocks is the entire, tobacco pack. Look at what's happening with an ITC, for instance. Look at what a Godfrey Phillips, and how unfortunate, because just yesterday the stock spiked up about double digit. There are reports doing the rounds that perhaps GST on cigarettes and tobacco products may actually be raised all the way to 40%. Currently, remember, it's at 28% and it's applicable on these products besides the cess and other levies also, which take the total indirect taxes to 53%. Why the move could be mulled? currently the indirect tax collection on these products, like I mentioned, is at 53%, which is below the 75% recommended by WHO. The idea, of course, is to ensure that the tax revenue on these products does not fall once levying of the compensation cess ends, which is now scheduled for March 31st of next year. But Sudip, in this current decline, because we're talking about an addiction sector here, do you sense that volumes could get impacted for any of these players? Today, of course, is a knee-jerk reaction, but if the stocks fall even further, do you think they become good buys?
Well, Godfrey Phillips have performed remarkably well in the last 1.5 years. And, and in the market also, they have gained market share. So there is absolutely no doubt about Godfrey Phillips and its performance. ITC and VST, the other two companies, have been a steady, stable performers. One has to keep watching the space as far as the excise duty and the GST and cess and related challenges. One has to see the assumption that demand will start falling because the prices will go up hasn't held earlier. Also, demand has been pretty constant, to an extent inelastic. While they must have lost some consumers on the upper end, many people on the lower end who must have graduated into cigarettes from other forms of tobacco. So on the balance, I think overall demand for cigarettes in the country has gone up year on year as things stand today. And I think it's going to be many more years before actually decline in demand starts.
Yeah, for the 44% of the sales for ITC, which does come from cigarettes, it also cherishes a good 58% of EBIT margins. And like Sudip has been saying, that we've seen the price hikes or tax hikes come in time and again, but hasn't quite impacted the sectors. If anything, the cigarette volumes have only gone up higher, at least for ITC. That said, let's just take stock of what else is happening in the market. Well, today, of course, most of these stocks are seeing a bit of a drubbing. But Kunal, where do you see Godfrey Phillips fall to if there is some follow-through selling, and then would you buy that decline?
Well, yeah, I think at current levels itself, 6,000 or maybe 5,500 could be a better level for Godfrey Phillips. Because what had happened is, on the way up when the stock moved towards 7,000, 7,500 mark, the indicators were steeply overbought for Godfrey Phillips. Right now, the last 2 days of selling indicates that it's more of a mean reversion, for the indicators and for the prices after that steep run up for the stock. And that support point for the stock is somewhere closer to 5,500 mark. So maybe starting at current levels and then building on to the stock at lower levels, say closer to 5,500 could be a good strategy.
Right. Naresh, let me come to you. Actually, as I see my screen, the flashes that COMEX April gold contracts have hit a fresh record high levels, is reached the levels of about $2,973 per ounce. What's your take coming in on the Indian gold financier companies in the light of what exactly is happening to the gold market and the gold prices globally and back home as well? But on the charts, how are these gold financiers looking to you? Because most of them actually did report decent set of numbers.
So you can see clearly Muthoot Finance has been the leader. Say as of now also it's just 1 to 2% away from an all-time high. It's up from November when it was at 1,800 odd levels to 2,200, 2,300 now. So clearly it's been a positive beneficiary even when the markets have corrected. At the same time, Manappuram, which continues to have a lot of volatility, keeps going into derivative band, but it is coming back to that 200, 205 mark. And that has been a resistance for the stock from 2019 onwards. So for now, going forward, it could be Manappuram also, which could break out into new all-time highs. Both these names look interesting, and Manappuram on any sharper dip would be an interesting opportunity.
Bunch of other stocks. JP Morgan has come out with a note on Petronet LNG. They've maintained their overweight target price 377. They're saying that the stock builds in no volume growth, 15% cut in the Dahej regas tariffs by March is what they're anticipating. But they're saying the strong valuation support for the stock is what makes it attractive right now. Petronet LNG, a big winner today, holding up 3% as we speak. For Tata Power as well, there's been an HSBC upgrade. They've upgraded the stock to now hold from the earlier reduce, and from 300 they've upped the price target also to 345. They're saying there's improving execution amidst weak macro, and they are increasing the FY25 to 26 estimated EPS by 9 to 13%. That's Tata Power in trade, currently holding up 3%. Sudeep, we were just chatting about this with our earlier expert as well. What's the best way to capture this entire power story in India? Would it be via financiers, grid, anything else?
I think, the way I look at it, there is absolutely no doubt that entire power sector is going through a massive transformation. And this positive transformation is going to last for many more years. The demand is structural, and every segment of the power industry will benefit out of that. Now, if I come back to the stock market, I think I will definitely be a buyer in NTPC. I have been buyer in NTPC for the last couple of years, and I continue to maintain my stand there. It's the leader in the power generation space with fantastic backward-forward integration, and of course, the green energy subsidiary and everything else around it, the way it's growing, commendable. Valuation-wise, it's not cheap, but again, it can be picked up for 1 year plus kind of a time horizon. The power component and power ancillary manufacturers can, transformer and other manufacturers can also be looked at. Transformers and rectifiers is one company which we have been liking for some time. Of course, there are many other Volcap and many other companies, but the valuation there isn't cheap. The power financiers, again, do look good. Look, we still have massive power capacity which needs to be created going forward. And the financing for this has to come from, not from traditional banks, but from these power financiers. So the demand for their services and their loans will remain very, very strong in the foreseeable future. So both the power financiers, or all three power financiers, can be looked at from a long-term perspective.
Moving on, Adani Group portfolio delivered its highest ever trailing 12-month EBITDA or operating income and ensured sufficient liquidity to cover the debt servicing for at least the next 12 months. The credit profile has now achieved a significant milestone with about 75% of the run rate EBITDA generated from the assets with domestic ratings of AA- and above. That's as per their statements. The company has added that the Adani portfolio companies are now on a high capex path and with a strong base of increasing cash flow generation and project execution outlay of their respective portfolio companies. So that's about the Adani group of companies who are in a new phase of major capital. But talking about Adani group of companies, Kunal, what's your take coming in on the charts and which of those companies actually are looking attractive? Do you think that still Adani Ports rules the charts?
I've not seen the Adani group of stocks frankly since last so many weeks. But yeah, I think just primarily looking at the charts right now, Adani Ports, Adani Enterprise are the ones which had been formidably very strong. But in this leg of the market move, the last 2-3 months specifically, I think almost all of these stocks, have actually underperformed. Even the likes of Adani Green, Adani Transmission, Adani Wilmar, I think all of these stocks have gone through a sharp corrective phase. The concern for these stocks, what happened earlier was maybe 2021, 22, that kind of a time phase. These stocks were moving into a different tangent altogether, devoid of how the markets were moving up. And now comes a point where these stocks are struggling to find their feedback, even on the phase when the market comes into a rally kind of a mode. So I would probably expect that these stocks may continue to lag, underperform for quite a bit of time. You need to wait out for those decisive breakouts. So the first level of a breakout we look out for is the stocks breaking past above their 50 as well as their 100 moving averages. And then I think if these stocks come back into a swing breakout, by that maybe a 10% rise from the previous swing lows, that could probably be a starting point where these stocks may start to look attractive. But I think buying on dips in these kind of stocks as of now may not be a fruitful strategy.
All right, so that's the take coming in on the Adani group of counters. Coming to you, Mr. Bandyopadhyay, I wanted to understand your views actually coming in on the entire space, that is the FMCG space, because if you look at the charts of this one, except February 1st, when this index actually rose about 3%, post that is actually seen 14 days of losing streak. What's your take coming on the FMCG space? Do you think that this is going to be the sector for the H2 of 2025 as everyone is touting it to be?
Unfortunately, the recovery is taking more time than it was expected. The Q3 numbers we saw, yeah, this was nothing great. I mean, they did kind of didn't meet even the market expectations. We had seen the rural demand softening, and then when rural demand picked up, urban demand was softening. So overall, I think they're still to come out of the demand challenges. It will take probably a little more time. We know what's happening in the economy. I think the government, through the budget, has tried to give a lot of incentive for consumption. We'll have to wait and watch. And one must remember that the traditional FMCG companies may not be the direct beneficiaries of the consumption boost. That probably will go to consumer durables and other little more pricier category. Typical FMCG companies' consumption may not get a boost through the budget reliefs. However, overall improvement in the economy will definitely stop the downtrading as far as the the product basket is concerned. I am long-term positive on HUL, Dabur, ITC. But as things stand today, I think it will take a little more time before the recovery phase starts. If somebody is a long-term investor, they can look at opportunity for picking up slowly these stocks and building a portfolio. But to rush into these stocks for upward movement, immediate upward movement, the time hasn't yet come.
That's the take coming in on what to do with staples right now. But just taking stock of how we're shutting shop in the day, power, of course, seems to be that one big mover. There's some buying selectively within autos as well. Tata Motors, Bajaj Auto, M&M all holding out well. Shriram Finance, of course, is your top mover within the large caps right now, nudging that 580 level. Trend seeing a very meager bounce. IndusInd, perhaps the only banking counter, along with SBI from within the large caps, which is holding out. And then, of course, there are a couple of metal plays like a Hindalco, Tata Steel, JSW. They're the ones which are also holding out quite okay in trade as we speak right now. But Sudip, the sector that I want to discuss with you is what's happening within the entire pharma pack. A lot of fear around tariffs. We've seen a spate of US FDA observations as well on many pharma companies in just the last few days itself. Do you think these opportunities are good buying opportunities because the stocks are on a decline?
Aisha, selectively good buying opportunity. One has to be a little careful about what you are buying. Look, there are two things which I strongly believe. One is the tariff threat by the US president and US current administration is real. Some kind of tariff is definitely going to come, which will create some disadvantage vis-a-vis export into US. Now, under these circumstances, companies which have manufacturing facilities in US will benefit. So, Piramal Pharma's name comes to my mind immediately. Of course, otherwise also their business is doing well. The hospital generics is doing well. Complex, medicines, which basket they have is doing well. And CDMO is booming. But the biggest positive is they have a large US manufacturing facility. So one should look at that. The other side, I believe that domestic pharma demand is strong and growing, and the compounding rate is steady. So one can focus on companies having strong domestic business. Mankind Pharma is one company which has about 95% of its business coming from domestic market is what I look at. Also, remember they acquired BSV a few months back. Generally, the analyst community didn't like it much, but I believe it's a significant long-term positive. So one can look at domestic-focused pharma companies as well as pharma companies having manufacturing facilities in US.
Kunal, let's see those on the charts, Mankind as well as Piramal Pharma.
Yeah, I think Mankind, for example, the stock made a high of around 3,100 mid of December 2024, and from there the stock has come back towards 2,200 levels, which means almost like a 30% correction for the stock from the recent highs. The volumes have been a bit more abysmal for the stock in this leg of sell-off, which means we could be looking at the stock recovering say over the next few weeks. Piramal Pharma could be an interesting case. The stock, I think, had fallen by more than 40% from 305 as a high towards 180 or 185, which was the low for Piramal Pharma. And from there, the stock has made a very good comeback, 2 days or 3 days of consecutive price uptick. And I think the stock has moved up on extremely higher volumes also. So I think that's another name to look out for. And it indicates that after such kind of strong moves which you've seen into the stock, it indicates that stocks form a solid bottom when they see such kind of a sharp price reaction from the immediate swing lows. So I think closer to 180 could be a swing low for Piramal Pharma and closer to 2,200 for Mankind.
Interesting. Sudip, what about MNC Pharma? Is one safer being in those names, your Abbott's, Pfizer's, etc.?
I think GSK came out with a fantastic set of numbers and definitely does look good. The overall MNC Pharma, the position I'm not too comfortable with. They have good products, they have a strong management, but I don't think as an investor I would rush to buy some of these MNC Pharma names at this stage. I will rather stick to the names I mentioned. GSK, of course, the product basket which they are introducing now has a lot of traction, so one can look at GSK.
That's the take coming in on Pharma and also MNC Pharma names. But on that note, Naresh, coming to you, wanted to know your BTST ideas for our viewers.
So first would be a buy on NMDC, seeing good momentum out here based on breakout done about 67, stop loss at 66, target price of 70. Second is a buy on Canara Bank, has seen a large correction showing reversal signs today. Stop loss at 87, target price of 92.
All right, Kunal, over to you. What are your BTST ideas?
I'll go with the one Tata Steel, something which I've been bullish on over the last few days. Looks attractive for a target of 145. Stop loss now could be trailed high to 133 for traders who are looking at a fresh buy. And the second would be a buy on Chambal Fertilizers, a stock which I think is on the verge of a breakout. 575 could be a BTST target, stop loss at 540.
All right, so those are the BTST ideas coming in from our experts. If you look at the markets at this point in time, yes, we are seeing some sort of semblance when you compare it to the rest of the Asian markets, because the Asian screen was bleeding red while Indian markets have held on in today's trading session. No doubt that you have the Nifty Bank that is underperforming the benchmark indices, but you have the advanced declaration, the breadth of the market still intact. It's looking pretty good. It's more shades of green than red, with Shriram Finance, NTPC, M&M as well as Adani Ports holding on to gains, while you have a major of the large caps as HDFC Bank that's weighing heavy on the Nifty Bank as well, 2.5% downtick coming for that one. Maruti, Tech Mahindra, Tata Consumers are the other set of losers in trade. But also, I wanted to come to you, Sudip, to get your final take coming in on the IT sector in particular. And how are you actually viewing this one? And are you playing this sort of a theme right now?
Well, I think overall I am positive on IT. We saw the Capgemini numbers a few days back, and though the Capgemini is not a representative of Indian IT, because every IT company has got a different set of clients and different expertise, I would say that to an extent, we believe that by and large, Indian IT companies are on a good wicket. The new US administration is very clear that they want a lot of activity, a lot of production, a lot of manufacturing, a lot of business in US, and that does augur well for Indian IT companies. Most of them have large presence in US itself, so it's not that they have to struggle with the visa challenges which the administration may pose. So I am positive as far as their order book is concerned, as far as their deal flow is concerned, and even their margins should be good. The trick would be to focus on sectors which are doing well. Let's say travel and tourism is doing well. So if an Indian IT company is focused on travel and tourism, I think we should look at that company. BFSI definitely under the current administration, the way US is moving, will do well. So companies having focus on BFSI will do well. So that's how we need to pick and choose. Amongst large cap and mid cap and small cap ITs, I would rather pick up specific IT companies rather than going by large, mid and small. So let's say Emphasis, they have a significant BFSI focus. So maybe it's one company one should look at. Maybe Coforge, because they've got a very large travel tourism related, airline related business. So one should probably look at that. So this is how I would rather pick stocks than by the capitalization of these companies.
Interesting. Sudip, we'll let you go on that note. Thanks as always for taking the time out and joining in.